Eric Mwade with Mwade.com with world market analysis for the weekend of January 9th and January 10th, 2016. All right, let's take a look at markets here and how market closed on Friday. We can see pretty much the biggest mover here is China, up 2%, and then we can see the rest of the markets were mixed. Down, up in Australia was up, KOSPI was up, Nikkei was down. Take a look at European markets at the close of Friday's session in this crazy week, and if it can load up, when it loads up, we can see here that European markets pretty much ended the week a little bit down, additionally down for the week. Take a look at the Americas here, and we can see that Brazilian market is probably closed, I'm not sure, or unchanged for the day. Canadian market slightly up. Other markets are slightly down to unchanged. US markets with about 2 hours to go, 1.5 hours to go to be precise, and we have pretty much slightly down picture, and we'll see how markets are going to close. So let's take a look at the charts. And we begin by taking a look at the Australian market. A couple of observations is our last analysis here on the daily chart was based on this line of resistance, which you can see here, uniform activity above that blue line and back below it. So that was a trap. And we can also see that that was also resistance precisely at about 61.8 on the daily RSI. And once that was confirmed at the end of the year 2015, we can see now we've started with the pullback. We also had this major drop here as the RSI slashed below 50 on the daily time frame. All to say that that was well telegraphed. Now if we take a look at the monthly, the risk here is that, and you're going to see this in many markets across the globe, there's a major risk that has been looming in markets, and it's the fact that markets could easily move to fresh 3-year lows. So here for the Australian market, the level we need to watch is if it stays above 506 point, so 5060.80. Anything below that, this is going to be a fresh break. This is the lowest monthly close for 2015 and beyond. And the risk here is that the RSI could easily move to fresh 3-year lows. We already saw what happened when it moved to fresh 3-year lows in August. So this movement in August to fresh 3-year lows began this slide. We haven't been back there since. So the risk here is absolutely major risk across the globe on many markets, which I'll show you. And take a look at the MACDs. MACDs are absolutely bearish. This is not what you want to see whenever you're long a market. Moving to fresh 3-year lows on the main MACD. So fresh 3-year lows, and also moving below zero on the MACD for the first time in many years. That's a sign of a market that could easily get worse. So watch those numbers, anything below that, and this is going to be setting up for another major drop. Let's take a look at China. This week we saw Chinese market being down about 12%, 10% for the week, major drops there. And we can see here that there was a slight attempt to break out here in late December that failed. So there was a warning sign. That failed to break out was a little bit of a warning sign. And so we stalled there. And also we discussed the idea that it had come back to test the break. So there was a break here in the RSI. This break brought the market off the highs. Of course, we haven't been back to those levels since. In fact, we are much lower. If we draw a line from there, and again, just for the sake of clarifying what is going on here, the resistance here last move was at around 61.8. Since then, we can see we are down, and we got this substantial drop on Monday, I believe, beginning of the year, because the RSI jumped below 50. So you get that big move. And of course you see Thursday's drop was also big because the RSI jumped below the other critical number, which is 30.9 on the daily RSI. So all those things pointing to a down market. We take a look at the weekly, and what we have on the weekly here is, if you remember, we've been talking about resistance around the 50 RSI level. So if you draw a line around the 50, this has become a problem over the last 6-7 months or so. Resistance there at the 50 level on the weekly RSI, resistance here, and we had been speculating that as long as there's resistance around this 50 level, this market is going to have to pull back. So the risk continues here that it could still have to test lower prices, because of the recent sell signals that can be seen on the daily, weeklies, and also now. If you take a look at the monthly, the risk here is right now the monthly RSI is just slightly above 50. If it cracks below 50, expect an extension of this monthly move. So if it cracks below 50, one can expect an extension of this already big move for the month. Let's take a look here at the South Korean market, the KOSPI, and we can see here this is not looking good. We've cracked to fresh monthly lows going back to the lows of 2015. The level to have watched there for a break was at about 1940, somewhere in that range approximately, which was this monthly closing low. We cracked below that, and the risk here is that we continue to be breaking to fresh 3-year lows, and that's a major sell signal in any market. That's risky right there, and we can see that the MACDs are already trading at fresh 3-year lows. So the setup in the South Korean market, like other markets, absolutely scary and bearish. Take a look at the Hong Kong market, which is also showing the same type of a break here, breaking below the recent 2015 monthly closing lows. We start the year by cracking below that, which is not a good sign of short-term direction. And the level to watch here is 20,846.30. Anything below that and this market is in trouble. Watch here as the RSI is cracking to fresh 3-year lows. And the biggest risk actually is the fact that the RSI could be moving below 38.2 on this monthly chart. This is a major sell signal. The first time it's going to be moving below 38.2 on the monthly setup. It's not good. MACDs clearly are very bearish, have been bearish. There was a break here, which was the middle of last year, and now we are seeing a fresh break again, and also moving below 0 on the monthly time frame. So there is another market that looks absolutely bearish. Gotta be careful. This doesn't mean the markets cannot bounce, but it just means that we have to go by what we see, and what we see right now is these markets are still showing a serious break, and so we can't start playing a bounce until we see the bounce. Otherwise we might be walking into a major catastrophic drop. If you take a look at the Japanese market, we can see here a huge drop for the week, about 6%, and we can see that if we go back to the top side resistance on the weekly RSI, there was a sell signal here that we discussed many weeks ago right there, and also it so happened to be back test of this break line. So if you take this break here in August, and this break was good enough to take the market lower, if you extend that line something like that, you can see that it was coming back to back test that. Another way of looking at this is to take a look at the break level. So there was your break level. The break level was here for a huge drop, and so you can draw a line from that break level, and you can see it did come perfectly and show resistance on the line here in the middle of November, and since then we are down. So that's the weekly. Take a look at the monthly and your monthly chart. As far as the Nikkei is concerned, it does not look good at the moment. Couple of observations. We got the RSI here looking like it is already at 3-year lows, and the biggest trap here is the fact that if it moves below 50 on the monthly time frame, expect a major drop or a continuation of this drop. So anything below 50 on the monthly time frame is going to be good for monthly close, and a big monthly close at that. So there's the risk, 3-year lows on the RSI, and also a move below 50. And we take a look at the monthly charts here, and we can see that the secondary MACD setting is already cracking to fresh 3-year lows, major sell signal there, and also moving below 0 for the first time on the MACD in more than 3 years. That's a major sell signal. The key here is this recent 2015 monthly closing low. If it can hold above that, maybe it can build on some of the time frames. The level to watch there is 17,388.15. Anything below that, and this is confirmation of a market that is going to be looking to drop, and I suspect a substantial drop at that. If we take a look at the Nifty the Indian market. Here we can see a couple of observations, and if you go back to the last couple of videos that we did, I think last week, we had drawn a line connecting RSI highs, and as we ended the year, this line was going to be a problem because it closed exactly on the line. So there was one area to watch, and since we hit that level, we've now pulled back about 4 or 5% for the week. So that resistance line was line connecting the highs of 2014 and 2015 and the recent highs here and now here. So that pullback on the weekly makes sense. That's one view. The other view is you can see that over the last couple of months we've shown uniform activity rejection at the 50 level on the weekly RSI. So that rejection at the RSI 50 gave us a high here. Simple analysis. Rejection with uniform activity at the 50 level on the weekly gave us that high coming into this week. All right, so we see that resistance being a problem. And so what we can do here is watch this recent weekly closing low. I think that might tell us what the market is doing. 7610.45 is this weekly closing low. Anything below that and the markets here are still gonna struggle. Now keep in mind, you can also look at the fact that the 10-week moving average, so the 10-week moving average for the Nifty is already at fresh 52-week lows, suggesting that prices are also gonna have to go to fresh 52-week lows. So let me repeat that. Because the 10-week moving average is at fresh lows, that suggests that prices are also gonna have to go to fresh lows. Generally, that's what happens. Now, if you take a look at the monthly chart, and here's a risk for this month. Already we are seeing this 4% drop the first week, and the problem here is that we are moving below 50 on the monthly time frame. And that RSI move below 50 is going to be a problem for this instrument. Anything below that, and one can expect substantially lower prices. Keep in mind that the RSI is also jumping to fresh 3-year lows or close to fresh 3-year lows. That's a major risk set up there. And we can see that the secondary MACD is already trading at fresh 3-year lows. This has been the risk that we've been talking about the last couple of months. And here we see that it is slipping to fresh 3-year lows. So the MACDs don't look good. If you take a look at the longer monthly chart, let's go back about 13 years just so we can capture the lows of 2008 on this chart. So 13 years of data, and the risk here is we have broken this support line. This support line going back to the lows of late 08, early 09, lows of 2011, 2012, and 2013, and here also in 2015 there was an attempt to hold. We've broken through that, and because this trend line is more than 3 years old, this is a major support trend line break. That by itself might suggest that this market is in serious trouble and the risk for lower prices is really elevated. If we take a look at the daily for the Nifty and draw our line where we've been seeing resistance level right there. So at about 61.8 is where this red line is, and you can see that the top coming into 2016 hit that level, and also the highs of late last year came exactly with the resistance on that line. So this has been a problem for this chart. On the daily, just want to show you what the MACDs are doing on the daily, because you can see here uniform activity rejection at the zero line on the MACD. So it went above zero and back below it with uniform activity. That tends to be a sell signal also. And the other MACD also moved back below zero. The one slight positive that I see and could be a good setup is, number one, we haven't materially broken these lows going back to September. So we've held again on this line. So that's good. And anything that's continues building on this support line here could actually set the market for a little bit of a pressure relieving rally. So we'll see. So that's one positive view. The other one is, as markets are testing lows here, you can see a slight improvement on the daily RSI. So there is a positive if you're looking for one. If we take a look at the hourly, there's a problem here, and we saw this also. We see this with the S&P 500, and I'll show that in a second. Right now we can see that this was a recent short-term break. I'm talking about over the last couple of days. This break on the hourly there brought the market with this gap down this past week. And so if we draw a line from there, you can see that on a short-term basis there's resistance because it is finding it difficult to move above that red line. Now I just want to show you another view before I go and show you the S&P 500. We can see here that on the 5-minute chart, at the highs of Friday's session, you can see that it hit that line again on the 5-minute chart, and there was resistance and the market came off the highs, and that line also happens to be at about 61.8. So lots of sell signals short term. Let's go back, take a look at the S&P 500 in relation to what I was trying to explain here. So let's take a look at the SPX. I digress a little bit, but I want to show you something, and actually this is better off. We see this clearly on the 30-minute chart. All right, and so 1 month 30-minute chart, RSI period 26, and what we have here is there was a recent break as we began the year. This break brought the market off that level, and this has been a problem now this whole week, that the markets have been unable to move above that break line. Same thing with what the Indian market is doing. It needs to clear that topside resistance before it can move higher. Take a look at the South African market by way of the South African Dow Jones South African Index, and we see here fresh break, RSI breaking down to 3-year lows, also moving below 50 over the last 2 months, which might explain this movement. We also see that the MACDs are also cracking to fresh lows, and that's why this market has been in trouble throughout 2015, especially since the highs here of about April. So continues to be bearish. Take a look at the ETF that tracks the Nigerian market, and what we have here is also a market that continues to stay below 30.90 on the monthly, and as such is the case, there is no rally that's going to take place, and any movement that is going to take it off the lows here, or whenever the lows are recorded, is going to first and foremost have to move the RSI above 30.90, just like it did during this period here. It moved above 30.90 and there was a slight recovery rally there. So that continues to be bearish also. Let's take a look at some European markets. Take a look here at the French market, and you can see that the French CAC 40 during these highs here had basically come to test the resistance level there, which happened to be the break point. So this break point there in August was being tested in November, and the market failed. So we're talking about this double top here. So there was a sell signal many months ago during these highs here. Also, there's a line connecting the top side RSI, and I'm talking about short term. You can see that there's even resistance if you draw that. Alright, but the key here, in my opinion, is we take a look at the MACDs. We can see that the main MACD failed to move above 0 in the month of December, and that uniform activity rejection at 0 was a sign that the market was running out of momentum. And we take a look at the monthly, and the monthly, just like other markets, is looking absolutely scary, because the more it holds below the lows of 2015 on a monthly closing basis, so fresh move here below last year's monthly closing low. The level to watch here is 455.29. anything below that and this market should actually continue to trend lower. If not trend lower, just completely collapse lower. RSI at 3-year lows, RSI moving below 50, which might explain the 5% drop so far. And we can see that the MACDs are already at 3-year lows on the secondary MACD and also below 0. So there's another market, this time in the European market, that is showing that it is not looking great. If we take a look at the FTSE, we can see that this is the line we were watching over the last couple of months. Every time the market rallied, it came back to that level. And the last couple of highs, this high for example came with a double top on that line, double top resistance on the same line there. And so that resistance, and also failed to hold above the 50-day moving average. So on the daily there was some resistance levels in the month of December, and you can also see that the daily RSI, the daily MACD had uniform activity above 0 and back below it for a sell signal there, and also MACD was rejected at 0, which is a sign of a market that wants to go down. Take a look at the weekly. The weekly has not been great on the as far as the FTSE is concerned, because if you take a look at the breakpoint recently, somewhere around here, just under 50, and the market has been struggling. It struggled to hold that level for the highs there before the plunge of August, and since then this has been resistance for the recent highs. Resistance on the weekly there, recent high, resistance on the weekly level, recent high. Keep in mind that all this is coming with rejection at the 50 weekly RSI level. So rejection at the 50 RSI level might explain why the market has continued to push this thing lower. Take a look at the monthly, and of course we know that it is cracking here to fresh lows below 3-year lows. So this previous monthly closing low was the monthly closing low, and this has been going back about 3 years. And the level to watch here is if the market can hold above that threshold, and the level to watch there is 661.61. So 6,061.61, and anything below that, as you can see, is not gonna be good. Already down 5%, and there could be more. Monthly RSI cracking below to fresh 3-year lows, and also moving below, or about to move below 38.2. As it cracks below 38.2, if it cracks below 38.2, expect a major continued move lower. So the risk is really to the downside. And we can also see here that the main MACDs are at 3-year lows on the MACDs. Just doesn't look good. And also trading below 0 on the main MACD. So the pressure there is really doesn't look great. Take a look at the German market, and we're going to take a look at the monthly. And you can see that the monthly chart, just like other markets here, about to move to fresh 3-year lows. If it does, that's not good. And we can also see that here we are moving below 50 on the monthly time frame. RSI, not good. Take a look at the MACDs, and you can see the setup is not good. We can see here rejection at the 0 line on this secondary MACD setting, and the main MACD could very easily move to fresh 3-year lows. So you can see the main MACD not too far off for moving to fresh lows. The level to watch here is if it can hold above 2015 monthly closing lows, and the level to watch there is 9,660.44. If you see this thing crack below that level, be aware that there could be much lower prices in store. Take a look at the Canadian market, and down about 4% this past week, and this is going back to our previous analysis. A simple line connecting RSI highs on the weekly chart gave us this resistance line, and so we have this, it came there, hit that level in December, so a pullback makes sense. Problem here is we are breaking to fresh weekly closing lows. So this is fresh lows that have not been seen over the last 3 years. That doesn't look good. And the worst thing here is that, and I've been talking about this for a long time, the fact that the Canadian market cracked to fresh 3-year lows, or the fresh lows in December, was a bearish sign. So we've been talking about this over the last 2-3 months. We also see that it cracked to fresh 3-year lows again after cracking to fresh 3-year lows in July. So there was a break to fresh 3-year lows here. Anybody who saw that knew that this market was in trouble, and so we telegraphed that drop very nicely. And also we are seeing another break here. Then the key here is it's moving already below 38.2, which is a major reason for this drop here. Keep in mind, now the RSI is close to another threshold number, which is 30.9. Should the monthly RSI move below 30.9, expect this market to stay down, and stay down for a while. We can also see here that the MACDs have been absolutely destroyed. 3-year lows in the middle of last year, 3-year lows again. We got the main MACD moving to fresh 3-year lows over the last 2 months, and also cracking below 0, which is just a sign of a market that is in deep trouble. Take a look at the Brazilian market, the Bovespa, this week down about 6%, cracking to fresh multi-year lows there, and this crack to fresh 3-year lows or fresh weekly lows took place at the beginning of December. It's been down since, and we talked about the monthly chart breaking down. Once it moved below this monthly level, this stock market was gonna be in trouble. The level that it broke through, almost irrelevant now because it's really moved below that, was 45,059.34. Once it moved below that, this market was always going to be in trouble, and it's been down since. And just don't see any reason why this would bounce right now, because it just doesn't look good here. RSI about to move below zero, or below to 3-year lows, or the MACD, excuse me. And additionally, we can see that the secondary MACD could move to fresh 3-year lows. So the MACDs here on both cases look like they could actually move to fresh 3-year lows, even though they are still trading below zero. So, man, could this market bounce? Take a look at the daily. I don't know. You can see the daily here also cracking to fresh moves below 30.90. Can it bounce? Definitely at some point it's gonna bounce. When? I don't know. Where? I have no idea. The hope is that when it moves to fresh lows, we can at least identify the setup. You can also see here that recently it came back to this level here. So the highs of the last couple of months came on this line at about 61.8, and also here. So the hope is that when the markets turn around, we should be able to see the signals. But for now, there's no sign at all. I want to conclude here by taking a look at the SPX on the monthly chart. And with about 1 hour to go in the US, S&P 500 down about 3%. 1 hour to go. The level to watch on the S&P 500 is if it can hold this threshold number here. So the level to watch there is S&P 500, and it is 1920.03. Anything cracking below that, and this thing would be moving to fresh 3-year lows. Take a look at the fact that the MACD, the RSI on the monthly, is now below 50. If it stays below 50, I suspect it's going to take out 1920, which is the monthly closing low for 2015. Take a look at the MACDs, and the MACDs, one of them is already showing resistance at the zero line recently in December, which was rejection, and while we are down now, this one could move to fresh 3-year lows. The main MACD is just now about to crack to fresh 3-year lows, so the risk is still to the downside. Enjoy your weekend. Eric Mwathe, themwathe.com. I leave you here with the US market with 1 hour to go, and we are down about 60 points on the Dow. We shall see how we close. Peace and blessings. Check me out next week during next week's weekend analysis video. Mwah! Peace. Peace. Blessings. Blessings. I am out. Mwah!